A good late afternoon and thanks for joining us. Sage here, you're watching 𝐊𝐴𝐼𝐼 TV live from Sydney. And this is the last show of the day, the last trade. There's no better way to wind down the day than with today's market close commentary, so let's dive straight in. The Australian shares ended lower on Monday as mixed corporate earnings and rising COVID-19 cases kept investors sidelined. Index heavyweights Beach Energy, Lendlease, Bendigo and Adelaide Bank and Seven West Media witnessed sell-offs after reporting earnings results. The ASX 200 fell 0.61% at the close. The index opened lower today and declined as much as 0.5% to hit an intraday low. Among the individual stocks, infant formula company A2 Milk emerged as a top gainer, closing 12.6% higher on takeover buzz. As per reports, global food giant Nestlé is eyeing to acquire the specialty dairy firm. And some of the other notable gainers were carsales.com, property trust GPT Group and electronics retailer JB Hi-Fi. On the losing side, however, Bendigo and Adelaide Bank topped the chart with 9.5% loss, and some of the other losers include oil producer Beach Energy, real estate firm Lendlease Group and cloud-based wagering platform PointsBet Holdings. Next up, let's see how the sectoral indices performed today. The equity market witnessed mixed trading as 6 of 11 sectoral indices ended in the green. The energy sector declined the most and settled with 3% loss, followed by financials, which fell over 1%. Among others, materials and utilities also closed in the negative terrain. Bucking the trend, however, consumer staples sector emerged as a top performer by rising 1.2%. And some of the other notable gainers were industrial, tech, 𝐊𝐴𝐼𝐼, telecom and healthcare. In the banking space, 3 of the big 4 lenders, Westpac Banking Corporation Australia and New Zealand Banking Group and Commonwealth Bank of Australia, ended lower. The National Australia Bank extended the rally on Monday after the lender last week reported 10.3% growth in cash profit at 1.70 billion Australian dollars for the third quarter, ended June 30th, 2021. In the materials space, index heavyweights Rio Tinto, Fortescue Metals Group and Pilbara Minerals ended lower. The sell-off in the mining stocks was attributed to a fall in the iron ore prices on concerns over the steel output controls in China and signs of economic slowdown in the world's top metal consumer. And bucking the trend, BHP shares rose on discussions with Woodside Petroleum to sell its petroleum business. Meanwhile, the gold stocks witnessed surges in buying owing to the rise in price of the yellow metal. Gold prices traded a near one-week high of $1,780 as a plunge in the US consumer sentiment allayed some concerns of an early tapering by the Federal Reserve. And the sectoral leaders, Silver Lake Resources, Northern Star Resources, Newcrest Mining, Ora Banda Mining and Geo-Pacific Resources were among the top gainers. Now, in this segment, we'll shift our focus towards the stocks that created a buzz today. Starting with the shares of infant formula company A2 Milk, which rallied over 12% amid the reports that global food giant Nestlé is eyeing to acquire the specialty dairy firm. And as per the report, Swiss milk product giant is taking a close look at the company. But industry insiders do not expect the deal before A2 Milk's annual results. Shares of the lithium explorer Firefinch rose nearly 10% following an ASX update. The company stated it has entered legal agreements to progress a joint venture with a unit of Jiangxi Gangfeng Lithium Co. at the Goulamina lithium project in southern Mali. It added first production from Goulamina will be accelerated and is now expected in 2023. And next up, shares of property trust GPT Group jumped as much as 4% following earnings updates. The net profit after tax attributable for the half year rose 246% compared to the same period last year, and the total revenue climbed 180%. In a separate release, GPT confirmed that it is in exclusive due diligence to acquire a portfolio from residential property development business Ascot Capital for about 800 million Australian dollars. It said the portfolio comprises 26 logistics and industrial assets along with 4 office assets. And now, before we look at some more of the shares that are in the news today, it's time for a short break.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐊𝐴𝐚 TV.
Welcome back. Thanks for joining us. Sage here, and you're watching 𝐊𝐴𝐚 TV live from Sydney. This is the last show of the day, the last trade. And we were continuing with the shares that have made the news today. Shares of Lendlease Group fell as much as 7.4% in line with the benchmark index. The construction and property firm said it will book 130 million to 170 million of Australian dollars pre-tax restructuring charge in the first 6 months of the financial year 2022. As per the company, the restructuring is expected to result in estimated impairment expense in the first half statutory net profit of 230 to 290 million Australian dollars pre-tax for the full year. The company has reported profit after tax of 94.28 million Australian dollars compared with 31.97 million Australian dollars a year earlier. And moving on now, shares of Austal rose as much as 2.71% after defence shipbuilder secured a deal, and the company has got the US Navy contract to repair and maintain all littoral combat ships in Mayport, Florida. The largest defence exporter in Australia has received similar contracts from the US Navy to work on LCS on the west coast. With an existing service centre in Singapore, ASB will be support to the US Navy LSC fleet globally. And next up, the share price of Metcash gained 3% after the food and staples retailer announced the successful completion of an off-market buyback of 200 million Australian dollars worth of shares. It has also elected to buy back 25 million Australian dollars, more than the indicative 175 million Australian dollars announced on 28th June 2021. Shares of BHP Group also made the news, climbing 1.8% to reach $78.14 Australian amid reports that Woodside Petroleum is in talks to acquire its petroleum business. And meanwhile, the Woodside share price dropped nearly 4%, down to $21.32 Australian, in line with the energy index, which slipped over 1%, owing to a fall in the crude oil price. The acquisition would boost Woodside's position in Australia's oil and gas sector at a time when it's facing competition from the proposed merger between Santos and Oil Search. And meanwhile, Woodside, in an exchange filing, confirmed that it is engaged in discussions with BHP regarding a potential merger involving BHP's entire petroleum business. The company said that the discussions are ongoing and have not reached a conclusion. Up next, shares of Beach Energy declined as much as 9%, down to $1.10 Australian after the oil producer reported a fall in revenue and profit for the financial year 2021. The full year net profit dropped 37% to 316.5 million Australian dollars, while revenue fell 10% to 1.56 billion Australian dollars. The company's board has also declared 1 cent per share dividend for shareholders. Commenting on the company's financial year 2022 guidance, Managing Director Matt Kay said that Beach expects production to be further impacted by the declining Western Flank fields. And now, before we take a look at more of the shares that are in the news today, it's time for another short break.
Boarding pass, please. Hi, I'm Holly Shields, and I'll be your host for 𝐊𝐴𝐚 TV's news show, Travel Insights. Tune in to get the latest developments in the travel and tourism space, from updates on restrictions to travel guides to info about recreation and outdoor activities, or to grabs of the financials of the sector. Though the travel industry has taken a hit from the pandemic, there's still potential left for a revival on the back of economic upturn and COVID-safe travel measures. So if you want to know where the travel and tourism space is heading, dust off your passport, pack your bags, and watch Travel Insights every Thursday exclusively on 𝐾ALKINE TV. I'll see you there.
Welcome back, viewers. I'm Sage and you're watching 𝐾ALKINE TV live from Sydney. This is the last show of the day, the last trade. And shares of electronics retailer JB Hi-Fi gained 3.2% to hit an intraday high of $49.83 after the company reported a robust earnings for the financial year ended June 30th, 2021. For the financial year 2021, the net profit rose 67.4%, reaching 506.1 million Australian dollars, while total sales were up as well 12.6%, reaching 8.92 billion Australian dollars. The company's board also declared a final dividend of 107 cents per share, fully franked, bringing the total dividend for the financial year 2021 to 287 cents apiece. The company, however, said that its sales in the first month of the new fiscal were hit by the lockdown, and the financial year 2022 sales for the year to date fell 14.9% in Australia due to the disruption caused by the COVID-19 restrictions. And amid the ongoing uncertainty arising from the pandemic, the group has also deferred financial year 2022 sales and earnings guidance. Next, the share price of BlueScope Steel rose 2.6% after the steel manufacturer more than tripled its final dividend after the profits surged during the 2021 financial year. The company has also announced an on-market share buyback of up to 500 million Australian dollars. For the financial year 2021, net profit after tax zoomed 1,137% to 1.19 billion Australian dollars, driven by the strong demand and steel spreads. And the sales from the continuing operations rose 14% to 12.9 billion Australian dollars. Boosted by robust earnings, it declared a final ordinary dividend of 25 cents a share, more than triple of what was paid a year ago by the company. It also paid a special dividend of 19 cents a share. And lastly, Bendigo and Adelaide Bank saw its shares fall as much as 9.7% despite announcing dividends for the financial year 2021. And the bank declared a final dividend of 26.5 cents a share for the financial year 2021. The company's net profit increased 172% to 524 million Australian dollars, and cash earnings rose 51%, reaching 457.2 million Australian dollars. The net interest margin declined 7 basis points to 2.26%, reflecting a significant growth in the fixed lending and competitive new business rates. Besides, the lender has also agreed to buy the Melbourne-based fintech 𝐊𝐴𝐼𝐻 for up to $116 million in shares, which will provide it with the ownership of the banking app Up. And now, before we take a look at more of the shares that are in the news, it's time for another short break. Property by 𝐾ALKINE. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐾ALKINE TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐾ALKINE. Thanks for joining us. Sage here. You're watching 𝐾ALKINE TV live from Sydney. This is the last show of the day, the last trade. And now in our next segment, we'll take a look east towards the Asian market performance. And the Asian market started the week on a cautious note ahead of a slew of Chinese data that could confirm a slowdown in Asia's largest economy. And the persistent concerns over the rising Delta variant in the region, as well as uncertainty about the possible geopolitical implications of the sudden collapse of the Afghan government, also left investors jittery. And Japan's Nikkei was the worst performer in the region, falling 1.7%. Japan was followed by South Korea's Kospi, which dropped 1.2%. In a similar trend, Taiwan's weighted stock index slipped over 1%, while Hong Kong's Hang Seng tumbled 0.75%. Singapore's Straits Times was down 0.4%, while Jakarta's stock exchange in Indonesia fell 1%. Bucking the trend, however, India's BSE Sensex gained 0.1% in the opening trade, while China's Shanghai Composite traded 0.4% higher. Let's move on now from Asia over to the US, and Wall Street ended higher over the weekend, even as a survey showed a shock slump in the US consumer sentiment amid the Delta fears. The Dow Jones rose 0.04%, while the S&P 500 gained 0.16%. The Nasdaq Composite added 0.04%. And we've reached the last segment of the show, and in this segment we'll take a quick look at the crypto market's performance. And the cryptocurrencies edged higher during the Asian trading hour on Monday, with major coins such as Bitcoin, Ether and XRP trading in the green in a fresh development. American movie theatre chain AMC Entertainment is mulling to roll out technology to accept Bitcoin for tickets and concessions by the end of the year. With this, AMC will join the league of larger major players such as Microsoft, PayPal, Etsy and Starbucks, which accepts digital payments. And Bitcoin, the world's largest cryptocurrency by market capitalisation, was up 2% at around $47,500 US. In the past 24 hours, the most popular currency traded in the range of $45,500 and $48,000 US, with net flows of about $34.9 billion US. Now, Ether, the world's second largest crypto, also rose over 1% to trade around $3,300 US. And the coin has witnessed a strong rally in the past few weeks after the Ethereum blockchain network updated its software called the London hard fork. And in a similar fashion, other digital currencies such as Dogecoin, XRP and Uniswap were also trading higher. And well, that's all for now in the last trade, and with our existing operations in Australia, New Zealand, UK and Canada, 𝐾ALKINE Media has launched its operations in the US markets, and every day in our first show, the Global Market Roundup, you can get the latest and important news of the US, Europe and Asia Pacific markets. So on that note, I'll see you tomorrow at 10 a.m. live from Sydney. Sage signing off.